welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our newest offering, What's Hot, a show that will focus on truly the buzzing news on Dalal Street. And today, What's Hot is two listings that have happened. One is Groww after the IPO, got massive subscriptions. On the issue price of 100 rupees, we have seen Groww price listing at 112 rupees per share. It's now trading above 17% over the issue price. So day one listing gains stand at over 17% for Groww. The second big listing has happened by way of the demerged entity of Tata Motors, the commercial vehicles business of Tata Motors that has also listed on the stock exchanges. The price at which we have seen Tata Motors list at is at 335 rupees, and therefore you do see that strong listing. Okay, so the final price for Groww listing on the NSE is at 116 rupees versus the issue price of 100 rupees as well. That's up on your screens at 10 a.m. So substantial gains of about 80% coming in for the viewers and all those investors, those who had got the allotment for Groww. It has listed at a premium. Even for Tata Motors, the CV business, we have seen that the Tata Motors share has got listed today at 335 rupees per share. Remember, this entire demerged entity was already in existence since October 1st. The stock market investors who had Tata Motors shares in their portfolio, the consolidated entity before October 14 in their portfolio, you stand to benefit today because you have got one free share of Tata Motors Commercial Vehicles business today vis-a-vis for one share of the consolidated business held earlier. Remember, we had already seen a month back in a special price discovery session, the Tata Motors passenger vehicles business list at 400 rupees after both the businesses got split, and today it's the commercial vehicles business that has got listed, and this is at a 330 rupees price on the BSE as well. Let's actually welcome our guest on board. Prashant Tapsi is with us to share with us what is the understanding on both these companies one by one. Prashant, warm welcome to you. Good to have you with us. We will be, of course, taking your view on the markets as well, but these are the two big listings that have taken place just moments ago. Let's start off with Tata Motors. That's the big player that we are looking at. The commercial vehicles business now getting listed at 330 rupees per share. How are you looking at this entity and the kind of opportunity it presents to fresh investors now? You have two choices, Tata Motors passenger vehicles and Tata Motors commercial vehicles to choose from today.
Good morning, Sakshi. I think it's a very great day for Tata Motors. Almost of the long-waited time for a demerger and unlocking the shareholders' value. Tata Motors successfully did this in the last 1 year, and it was demerged on October 14th. So obviously, yes, the CV business has embedded value, which is very much more than the PV as a business model. The way how the cash has been generated in the CV business, that creates a lot of value for investors to hold CV in their portfolio, and PV continues to have its own challenges, which are with respect to the JLR, with respect to the tariff, under the pressure, because Tata Motors PV has a domestic business model as well as a global spread across China, Europe, and other countries. So the PV will continue to see some kind of challenges in the short term as well as in the medium term, but long term looks very good for me at this point of time. The way how Indian domestic PV segment, EV segment, as well as the new launches are going to plan out for next 1 month. When we talk about CV, I think yes, it was demerged at almost like 260 rupees on the record date, and I think it has been listed at 335, which is giving a decent 12-13% return for the investors who were holding on the on or before the record date. We continue to hold a very positive view on the consolidated two companies, which is the PV as well as CV. But CV has more room to grow. That will be compared with Ashoka Leyland, and also I think the valuation looks still good for us at a listing price of 330-335, and we have a target of at least 400-410 for a short period of time to medium term. So I recommend to hold both, but there is a risk in PV, and CV has a good growth going forward.
Absolutely. When we talk about Tata Motors Limited, as it will be now renamed, as far as the commercial vehicles business is concerned, remember this is has a presence across the segments ranging from small cargo vehicles, medium and heavy commercial vehicles as well. The demerged entity will also include the recently acquired Iveco Group's NV, whose integration is also likely to be completed by the financial year 2027 as well. This is the largest commercial vehicles business that is now listed on the stock exchanges as well. Like I pointed out, all those who have had the shares before the demerger as on October 14 in their investment portfolio, you will receive one share and that will get reflected on your accounts today. But I wanted to understand, when you also pointed out, PV versus CV, the opportunities that are emerging, the kind of competition that is now surging as far as the EVs are concerned, electric vehicles are concerned. Where do you see more benefit accruing for Tata Motors?
See, EV will continue to have some kind of challenges. If you remember, Tata Motor was the first, company which took the biggest market share in the EV, almost like 60-65%, and then slowly the competitors like Mahindra and Mahindra and other four-wheelers started getting into this segment. So there was some kind of teething problem for the EV segment to grow faster, but now it is at a good space. Obviously, the bigger market share company like Tata Motors will see some kind of pressure. Mahindra and Mahindra is doing really great. If you see their performance and all, I think Mahindra and Mahindra is good when we talk about the EV as a segment. Tata Motors EV as a business, yes, it's a strong vehicle. I think that will continue to see. If you see the October numbers, I think in the EV as well as in the PV segment, Tata Motors was the one company which sold highest in the month of October, almost 30,000. For the whole month, I think 1 lakh cars were sold by Tata Motors. So overall, the risk is there to lose some kind of market share, but again, the market is still opening up and widening up. I think Tata Motors will continue to see some kind of good larger market share in the EV segment, but the competition from MG or M&M and that will continue to eat some kind of market share.
Okay, but I also wanted to ask you, with respect to all the viewers, the big question would be coming in that 2024 was a brilliant year for Tata Motors consolidated business. 2025 has actually panned out to be a phase of completely testing patience on the stock price performance of the consolidated entity. This is a landmark moment that we are seeing, a milestone in the journey of Tata Motors, completely diversifying two of the businesses and focusing each on their core businesses as well. How do you see the share price performance going forward from here?
So, with respect to PV?
With respect to both.
Both. I can see continuously, I think the way I said in the morning outlook, the PV will continue to have some kind of challenges. That would be a global pace. Domestic has a great move going forward, but again, more valuation comes from the JLR as a business model in the PV segment. So that will keep some kind of pressure, the slowdown in the China, Europe, and the way how tariff is going to play out in the very shorter period of time. So PV will see some kind of very consolidated growth in terms of business as well as in terms of the prices. But more action can be seen in the CV business as the new acquired company will also start presenting their valuation in this current CV business at least for next financial year. But that will be starting discounting in the current model. So overall, the sales in the small cargo, the large heavy vehicles and all, I think there is a good traction towards economic growth, industry growth, infrastructure growth. So I think CV will be performing well when we talk about two companies in this financial year.
Okay, got that. And now let's focus on the new listing today from the IPO space, and that's the shares of Billion Brains Garage Ventures, the parent company of fintech platform Groww, that has got listed at 116 rupees per share vis-a-vis the issue price of 117-18% of a premium listing is what we have already seen on this company. What's the sense that you have here on Groww? What should investors do? Those who had got the allotment, what should they do on day one? And for those who may be looking at this as a fresh opportunity in the listed space, what should they do?
I think the name only says grow, so I think they will be completely growing very steadily as a proxy for Indian capital markets when they have a 26% market share in India, followed by Angel, which is around 15-16% market share in India. So obviously, if someone wants to have a very proxy attempt on the Indian capital markets, BSC, Groww, Angel, and other companies should be in the portfolio. But listing was slightly above what we were expecting. We were expecting a 5-10% kind of listing in the listing day, but again, it has overbitten our expectation also. That shows there is a huge demand in the proxy investment for a business to something like Groww. See, one difference what I have seen in Groww, Angel and all, I think Groww has been presenting well towards the youngsters, the generation next investors who would like to have their been managed by Groww. So I think if you see the way how the month-on-month client growth is there, so I think Groww has more younger people which are getting attracted to their portfolio. So I think with that no lookout, I think that will be a good outlook for a shorter period of time as well as a long period of time. So our target post listing should be anywhere between 125 to 135 in a very short period of time. So I think continue to hold. Those who are not getting allotted, wait for some time. At least today is a listing pop. There is some kind of very hot momentum in terms of buying. So there can be some kind of profit booking or some kind of consolidation in between 110, 112. So that would be a great price for new investors to hunt this stock for long-term investments.
Absolutely. The one key question that everybody was asking, and I'm sure Prashant, you would have answered a lot of clients' questions there as well, is the valuation bit at the upper end, about 62,000 odd crore rupees, making it more valuable than the peers like Angel One, Motilal Oswal Financial Services, 361 WAM, even Nuvama Wealth Management as well. So, how sustainable are these valuations going to be, and especially when it comes to be proving in terms of the earnings? Is the company well placed, or are there going to be challenges in the medium to long term as well? When we talk about the company's financials, we've seen FY25 revenue growing by about 50 odd percent year on year to 3,900 odd crore rupees. Adjusted EBITDA has jumped by 2,300 odd crore rupees. Net profit at 1,800 crores. It was a sharp turnaround from 800 crore rupees of a losses. So in just 1 year, you've done like a marked improvement. But will it be sustainable? Will it be able to sustain these valuations compared with what's happening on the broking space already, the traditional broking space?
See, when we talk about a market share of 26% and versus a 15% market share by Angel One or any other broking firms which are already listed like Angel One, Motilal Oswal or Nuvama or see, when they have a client base like this, almost 12 million customers in their hands, so there will be some kind of a higher valuation expected by a company. So that will be justified, I think, with the market share what they are having it. Slightly above the industry average, but if they are growing with 30, 40, 50% of year on year, and the way their business model has been set up, and they're also focusing more on the traditional businesses like F&O and all now, but they started with a direct mutual funds. I think they have a huge client base. They can explore that client base in each and every financial product, selling of financial product, cross-selling of many of the other products. So for me, yes, this will be justified. If there is some kind of correction in the Groww in terms of valuations, obviously it will also reflect in the other corrections on Angel, Motilal Oswal and all. So that will be a industry correction, not a stock specific correction for me. Right now on the listing day with a 116 rupees of price, there is slightly stretched day one premium, but that will be justified in the short period of time.
Okay, fair point. Now, Prashant, help us understand in the markets that have now improved in sentiment over the last couple of days. We have seen yet again today the levels of 25,840, 25,850 approaching now. Your sense of how the markets are poised? About 2 weeks back, we had seen a lot of attempts by the bulls to go across 26,000. There was heavy selling pressure there and we fell back. This week again, after those last 7-8 days of volatile moves, we are making an attempt to move higher. Will we face selling pressure yet again, or do you think this time around there is higher strength on the back of several sectors that are supporting the moves and earnings season also coming to an end? What's the suggestion on the markets?
So last week, why markets fell, one should understand the earnings were not so good as expected by the Q1 to Q2. There was like neutral to positive. Markets were on a high hope of a good consumer-driven economic growth in the earnings, but that failed. So that was the reason why markets have fallen. Now again, market to recover, 2-3 reasons. I think the shutdown of US economy, which is almost at a phasing out way. So that will give a lot of room for India, China, India-US trade deal. So I think that is also hopeful of happening in very shorter period of time. That is also building up in the markets. Second, again, the Goldman Sachs report which says India will see a good 10% earning growth for this financial year and 14% earning growth for next financial year. That is also giving some kind of confidence in the market. There is a possibility of a good 10-15% growth in the earnings. Third, again, yesterday I think the election by polls haven't come. So I think that is also giving sort of support for the BJP to win. So I think today's gain of almost 100 points, 115 points would be given majority to the exit poll of the election. So that is giving some kind of positive tick for the BJP, and then again markets are celebrating that move. Technically, also I think 25,800 level was a level where markets were waiting. That was the level where the market slipped down towards almost 25,500 and below. So now again close above 25,800 will keep a room towards 2600 and 26,700. You rightly pointed out there is a resistance, there is a selling pressure seen. There should be some kind of actual things happening versus the hope of the shutdown, the hope of India US signing off. So there is a hope that has to be actually getting down.
Okay. You will be shortly joined by Tata Power management, Prashant. How have you assessed the earnings of Tata Power, and what's the sense that you have here?
I think overall, every quarter by quarter, the numbers are very much decent on a positive, northward direction. But again, in terms of price action, the stock always fails post this result. So for me, on a trading perspective, with the Tata Motor, Tata Power, uh, at 400, 405 would be a good level for a target as well as the profit booking levels.
All right. Okay. Any key stock ideas before we let you go, Prashant?
I think the capital market stock should only focus the way how BSE has given some kind of good numbers. So Angel will continue to deliver well, and again Groww will be helping them to create some kind of re-rating in the industries going forward. So I think capital market stock should be one focus, and JSW Energy should be a second stock one should focus more on. I think there is some news with respect to the hydrogen business which they are going to explore a lot. So JSW Energy can be a second stock one should focus more on.
So you said BSE is coming into focus, 5% higher post earnings. We've seen a smart bounce there, but will it be able to sustain? It's been consolidating and underperforming for quite a while now. Do you think it's out of the underperformance zone? It's yet again picking up pace, and we could probably see levels of 3,000 and above sooner, if not later?
Not sooner, maybe in the medium term. I think on or before March 26th, that stock may see some kind of good momentum towards 3,000 plus. But time being, again, based on the results, today's up by 4-5%. It's in the overbought zone. So I think there will be some kind of profit booking attempt based on the results.
Okay, fair point. Apart from this, what we are given to understand, Prashant, is that Adani Group stocks are also buzzing in trade pretty smartly. Adani Enterprises, Adani Ports. What are you getting a sense of as far as the Adani stocks are concerned? How are you reading it to this fresh momentum?
Very positive. I think the way the Adani Group bond has been rated on a very positive way. So overall, the segment looks very good for me. In this again, Adani Enterprise as well as Adani Port, these two stocks should be on a trading basis. If you see Adani Enterprises, for me, it looks like it can go towards 2600 from the current levels, and Adani Port can be a second stock on a trading basis where I see a stock trading above 1550 levels.
Okay, fair point. What about the IT names? Suddenly, we are seeing the IT, stocks have shifted gears. They're now performing right from the top. Last 3 days alone, we have seen a smart move on the IT space. What's the sense here that you're getting?
I think the industry is trying to digest or justify the upcoming positive impact of tariff. So, if the shutdown is going to be clear very soon, and that will open up the room for a clear deal between US and India, and that will give a very clear picture on the IT industries, which was underperforming from last at least one month back. So, in this space, I think one should look at Tech Mahindra. I think there is a good room of almost 80 to 100 rupees momentum from the current levels, where the larger cap stocks like Infosys, TCS, Wipro have already moved out the performance in the short period of time. So Tech Mahindra as well as persistence can be two stocks one should focus more on, and even the mid cap stock emphasis looks very good for me at this point of time.
Okay, fair point. Another space that's been on the buzz is the defense space as well. Prashant, how have you been assessing that one over the last 3 odd sessions, about a 4% odd kind of a move?
I think post the Delhi issue, I think again the defense as a sector has been in the action. So whenever there is some kind of India Pakistan headlines being made in the market, so defense stocks gets into action because government will focus more on defense and lot of orders will be placed for those things. So I think that has already been played out. If you want to see defense, I think shipbuilding stocks should be more focused for me. Mazagon Docks or GRSE. If you see GRSE numbers, they were really good in terms of their top line growth as well as margin improvement, which was missing in the shipping companies, and the execution was the doubtful question. So now there are more focused by government, and even the government is focusing to have some kind of export opportunities in the shipbuilding. So Mazagon Dock, Cochin or GRS should be a stock, and HAL can be a stock to focus more on.
Fair point. Thank you so much, Prashanta, for being with us on the morning edition then and for sharing with us all your insights across the board from both secondary as well as primary market. And viewers, now it's time to shift focus on the earnings. Tata Power's Q2 earnings have come in and we are now joined by a very special management there to decode the earnings. Remember, before joining with him, we'll quickly help you understand a broad understanding of how the earnings have come in. For Tata Power, they've reported about a 14% year-on-year profit growth at 1245 odd crore rupees as well. Revenue has seen an uptick of about 3% at 15,700 odd crore rupees. We've also seen an EBITDA growth of 6% on a year-on-year basis as well. And now we'd also have the big announcement that's actually coming from Tata Power as they are planning to set up the country's largest solar wafers and ingots manufacturing plant with a capacity of 10 gigawatts going forward from here. Remember, this facility is going to be making the ingots and wafers, foundational material for solar cells, and that would complete Tata Power's presence across the manufacturing chain for the product. So we'll try and decode that for you as well. Let's welcome Dr. Praveer Sinha, MD and CEO of Tata Power, as he joins in on the program with us. Warm welcome to you, sir. Good to have you with us as always. Well, congratulations on this big announcement. Could you give us a broad sense of what this massive announcement means for the company, the capacity addition that you're looking at, where will the facility be coming in, what is the kind of timeline you're looking at, and for your company as a whole, how much downtime do we see before this actually reflects in the books?
Good morning, Sakshi. Such a pleasure to be on your show.
Thank you so much, sir.
You are right that this quarter has been a good performance, and just a couple of points I wanted to touch on that before I talk to you about the new manufacturing. I think our core businesses have started doing very well. Our existing generation, transmission, distribution, and renewable. And three specific areas are Odisha Discom, where we went in 2020-21, have started showing very good results, very stable performance. And what is important is that this will further improve in the subsequent quarters. So I think the good results you will see consistently from Odisha. Good result from manufacturing. The 4 gigawatt plant has fully stabilized. It has all the operational efficiencies, and that's why very good performance of the plant. And that will again be something you will see consistently happening in future also. And the third is our rooftop business. For the first time, we crossed 1,000 crores. And I think, again, we have established our market leadership, and we will continue to do exceedingly well going forward. Similar type of trends you will observe. In fact, better trends you will observe in future. The big announcement, two big announcements that we made. One is that we are going ahead with the another hydro plant in Bhutan. Yes. It is a 1125 megawatt plant with nearly 13,000 crore of investment. A very prestigious project. World Bank is going to finance, IFC, and another consortium of some of the other multilateral and Indian banks will be there. So it's a very prestigious project and the second largest project in Bhutan that will come up. And already pre-project activities work have started, and the main project work will start in mid of next year. We will have 40% stake in this company. 60% is government of Bhutan. And this is similar to the 600 megawatt project which we are already implementing. The second is we are planning to set up one of the largest wafer and ingot plant of 10 gigawatt. We are working with the state governments as well as MNRE on locating this plant and also the type of support that will be provided under PLI and the state grants. And once we finalize that, we will quickly start the work. We expect that in next 2 months, we'll be able to finalize this. We expect the plant to come up within 18 months. And once the location and land is identified, we'll quickly go ahead with the implementation of this. That will, in fact, complete the whole manufacturing chain, where we will be right through from ingot to wafer to cell and module. This is also Make in India commitment, and also meets the government requirement that from 1st June 2028, you need to use 100% of ingot and wafers locally and you can't import them. So I think we are very much on track. Our other businesses, including the pumped hydro project, is going on very well. Our renewable capacity adds have been little less in the last 2 quarters, but we will catch up during third and fourth quarter, and next financial year we'll do the 2.5 gigawatt of capacity add only for ourselves. Our third party EPC projects are virtually now over. So I think a very good foundation, very good fundamentals for Tata Power, and you will consistently see very good performance as you have seen in this quarter. And this is in spite of Mundra issue where the Mundra plant did not operate in the last quarter. We are in the last.
That one also, sir, if you could highlight that as well. On the Mundra plant.
We have, yeah, so on Mundra we have virtually finalized with the Gujarat, and it is going through the process of various approvals over there. And I do hope that within this month we'll close with them, and thereafter with all the other states who have said that whatever Gujarat decides, they'll be okay to go ahead with that. So I think we have come a long way, very stable performance, and Q3 will be much better than Q2, and Q4 will be much better than Q2 and Q3.
Okay, got that. So second half is going to be probably much stronger than the first half as well, is what you're already indicating. When we talk about your renewable energy capacity for the full year, if you could give us a guidance, sir, where are we at, and for the full year, where will we be at?
We are about 5,700. We expect that end of the year we will be 7,000. Okay. And next year, FY27, we should be around 10,000.
Okay, and your order book, sir, by the end of the year, where are we? What are we penciling in already?
So we are already have an order book of 5,400, and our target is to complete most of them in FY27 and 28.
Fair point. Sir, on the DISCOM business, you pointed out the success in the Odisha space as well. Could you give us a sense of the other markets that you're already looking at the success at Odisha?
So, out of the 28 states, 27 states are the potential market. There are two parts of it. One is the new Electricity Act amendment, which is talking about the parallel licensing, as we do in Mumbai, where we have parallel licensing, and we are very confident of doing that sort of arrangement also. And this can happen in many cities in the country. The second is there is a proposal of the government based on the group of ministers that some of the states which are having huge financial losses, those states will be asked to go for public-private partnership, and it is linked to certain government support, Government of India support. So that also is expected in next year. And these are opportunities for us where we can be the first off the block, because we've already done this in Odisha, which is a mix of urban and rural. And this is a unique capability that we have developed. And I think we'll be in a much better position in future to implement it in other states and bring better quality service as well as reliability of power and financial improvement in all the states.
Okay, fair point. Thank you so much, sir, for speaking to us. We are out of time, but we would have loved to discuss more. And of course, we will invite you once again to detail for us the vision going forward from here. All the very best for all the announcements that you made, and for the steady quarter, and all the very best for the upcoming quarters as well. Thank you so much for your time.
Thank you. Thank you very much.
All right, viewers, we'll now wrap it up here on What's Hot. As you've heard it from the management, steady quarterly earnings, hopeful of a better Q3 as well as an even better Q4. So the second half is likely to pan out even better for Tata Power going forward from here. He's already highlighted how the capacity additions are going to be, growing as far as renewable energy capacity is also going. And of course, the big announcements on Bhutan as well as on the solar play as well. Stay tuned with us as much more awaits for you on the D Street right ahead of What's Hot as well. In case you have any questions about the stocks in your portfolio, I'll be back at 12 noon to answer all your queries with Top Market Master on Daily Calls.